I have a feeling that you'd like to frame this in positive terms. But one must ask, how can abandoning a listings effort be seen as anything but, I don't know, let's pick a word out of the air, embarrassment?
Right. I mean, I think for us, it was an opportunity to ensure that we're focused on the things that are most important to us and where we can have the biggest impact. If you look at listings and trading, which are the two businesses we run for the exchange, it is in many ways like the tale of two businesses, right? On the trading side, we're trading 6,000 stocks a day, record volume, record market share. As a company, this is going to be a record year for revenue and for profits. So we're in such a good position because of the trading business. On the listing side, we have a single listing. So after exiting, we'll still trade 6,000 stocks. We won't list any companies. And it's been a business that we've tried to kind of enter the space. There's a lot of inertia, a lot of indifference. There's a lot of companies who I think were interested in a switch, but getting the board approval to do it just ended up becoming, I think, a bit more challenging than we thought. So, from our perspective, it was one where, even though we've been in it a very short time, sticking it out just really didn't make a lot of sense. I think just given how well some of the other businesses are doing, and we're launching 3 new businesses this year as well, so this was a time for sure for us to be focused, and I think we have a lot more clarity on what we want to do and who we want to be as a company, and I think this decision reflects that.
We'll get into where you're going, but why is it, do you think? You mentioned boards being reluctant to allow their companies to switch exchanges, but really, what is it about the stranglehold that the NYSE and the NASDAQ have on equity listings that made it so difficult for you to crack?
I think it's a couple things. One, it's a 45-year-old duopoly, right? So it's, I think people are used to listings being about the event of listing and the ceremony around listing and the opening and the bell ringings, and we were being asked to consider things that to us just seemed kind of crazy. We're a technology company that was being asked in a way to be an events company, and I think that felt odd to us and not authentic to us. I think the other aspect is that corporates are like outsiders in the finance game. Yes, their stock is traded on a daily basis, but they're all, they're running different kinds of businesses, and what we wanted to do is we wanted to get the corporates and kind of take them from outsiders and educate them up to become insiders, appreciate market structure and what we're building. And I think what we found was that the exchanges have done a very good job of keeping companies in the dark. We flew all over the country to try to educate different companies,
of course,
and it was tough.
It's in their best interest to protect their business model, to protect what they feel are their competitive advantages. It must frustrate you that those same 2 exchanges plus the SIBO are now taking the SEC to court over the transaction fee pilot, which is something you've supported because you've been highly critical of the maker-taker model.
Yeah. I mean, I think exchanges on a lot of fronts are under attack, whether it's market data and connectivity, whether it's rebates in the transaction fee pilot. I think that's another opportunity that we see that, listen, the market is going to undergo huge change. There's a lot of regulatory tailwinds behind the things that IEX has been pushing. And as we sit back and think about, okay, where can we best deploy our time and energy and resources and investment, these other businesses, including trading as our #1 priority, just end up becoming a much bigger priority for us.
So where is the new push going to be?
So trading first and foremost. I think, again, the market share has grown. So, we're doing 3%. Today's going to be one of our largest days. So it was good to see our clients come in and support us on a day where, as you said, the headlines, caused a lot of questions. I think clients supporting our core trading business continuing to grow. And a lot of people say, well, what does 3% even mean? We're bigger than the London Stock Exchange in daily notional. So for an upstart, that is a pretty good figure. We can continue to grow. 60% of market share in the U.S. market is attached to an exchange rebate. And the SEC their pilot is looking at these rebates. So I think that's something that's important.
But Bill Ackman learned the hard way that you can't bet on regulatory change, right? He went after Herbalife betting on a regulatory change to support his investment thesis. Yeah. So let's say there is no change, no meaningful change in the structure of the U.S. equity market. How do you grow market share?
Well, I think we keep growing. I mean, we've been growing linearly kind of since we started, and I think part of the reason to make disciplined decision is because we can't bet on regulatory change. We can certainly try to educate clients and brokers, but record profits, rebates still exist, right? So I think for us, it's continuing to grow, trying to kind of, again, help these catalysts come along. But part of being disciplined, I mean, we've been profitable since 2015. Discipline's an important practice for us. And I think as we looked at this, it was emotionally, I think you don't want to step away from any fight. I think, we understand the place we have in the market. A lot of companies, I think, wanted us to stick it out. I think from our perspective, discipline is really important, and discipline means being focused, and being focused means making decisions that are in the best interest of the business and our clients. And I think we got a lot of positive messages from investors, pensions, brokers even saying you're focusing back kind of where you should be. And I think for us that was reassuring to hear.